Hey everyone, welcome back to another Wealthsimple Portfolio update video where the portfolio is currently sitting at $227,760.98, and that's a total all-time gain of almost 65% or almost $90,000. And this week, as always, I will be going over all of my accounts within Wealthsimple, and I'll be covering all the transactions I made within each account this week. And for the reason why you may have clicked on this video, later on in the video, I will be going over an indicator that might be showing that we're in for a market crash here soon, so be sure to stick around for that information. Before we jump into my account breakdowns, we're getting super close to 4,000 subscribers here on the channel. Be sure to hit that subscribe button down below if you are enjoying, and also drop a like down below as well. It helps push the video out to more investors like yourself, and overall just helps the video immensely. And also a quick plug here for Blossom. I am now obviously on Blossom. Be sure to follow me. Link in the description or at FinTrack Freedom. If you don't have an account, you can also sign up with my link in the description. Hope to see you on there. All right, so this week the TFSA is at $83,978.93. And this week the TFSA saw a pretty nice gain of about $1,700 or 2%. And overall the TFSA is up 51%. Or just under $29,000. Transactions in the TFSA consist of a $75 buy of VFV, a $25 buy of QQC.F, a $50 buy of FBTC, which is a Bitcoin ETF, and lastly, I had a $125 Canadian buy of VOO. This was in US dollars. It was about $90 USD. I am sitting quite heavy with USD funds in the account, and instead of converting it to Canadian dollars, I'm keeping it in USD and just putting it into VOO instead of VFE. And this is what the holdings are looking like here in the TFSA if you want to go ahead and pause at any point here. Next account up, the RRSP, it's at $73,490.90, and this week, just like the TFSA, it was up about 2% or about $1,600. Checking out the all-time performance, the RRSP is up 74% or just over $31,000. And in the RRSP this week, I bought 250 Canadian worth of VOO. Again, this was in US dollars, so I didn't want to convert it to Canadian. This is just what it rounded to in Canadian dollars. And then I had a $75 buy of SCHD and a $50 buy of FBTC, which again is the Bitcoin ETF. These are all my current holdings here in my RRSP. Feel free to pause at any point to check any of them out. Non-registered account is at $18,053.32. The account was up almost 2% or $300 this week. And the account is getting pretty close to 100% all-time return, which is pretty crazy because I have not put money in here since about 2023, so like over 2 years at this point. So up about $8,500, not too bad. And obviously no transactions here in this account for the week. And I only have one position here in the non-registered account. It is just VFE. And that's pretty cool. My all-time return is 7777. 7's my favorite number. My crypto account is continuing its struggles. It's at $40,705.20, and it was down 5% or about $2,000 this week. All time though, the account is still up 150% or almost $25,000. And even the past month, it is down $5,000 or over 11%. But are we up? No, we're pretty much flat over the 3-month. And obviously the 1 year is up about 37%. And then this week in the crypto account, I just had a $50 recurring buy of Bitcoin. These are all the holdings I have in my crypto account. Feel free to pause at any point to check any of them out. And the last account here is my checking account, and it's at $11,558.93. And I saw a total negative withdrawal in this account this week of about $1,200. I had some purchases to do outside of Wealthsimple here. And then I had a $60 transfer over to my crypto account. And then I made $26.22 cash back from my Wealthsimple credit card, which I just got a couple weeks ago. And that was put back here into this account. So that's pretty exciting to see. The biggest question in the stock market tends to always be, are we in for a crash? It seems like, especially the past couple years, as the S&P 500 has made new all-time highs after new all-time highs, this question has probably been in the back of your minds for quite a while now. And if you've never heard of the Buffett indicator, aka the Buffett index or Buffett ratio, it's the ratio of total United States stocks market to the GDP. So for example, you would take the total US stock market value, which we have here of 65.47 trillion, and you divide it by the gross domestic product or GDP, which is about $30 trillion, and we get a percentage here of 217%. Essentially, the Buffett indicator expresses the value of US stock market in terms of the size of the economy. If the stock market value is growing much faster than the actual economy, then it may be signaling a bubble. And I just would like to remind you that these values are as of June 30th. The stock market is probably about 7% higher, I believe, when I last checked, since June 30th of 2025. So market valuations are much higher since then. So this actually might be higher. This is updated quarterly, so we might find out soon here what these updated numbers are on this site. I'll leave a link to the site down below. But 200% plus is still something not to ignore. Now, exactly how concerning is 217% on the Buffett indicator? Well, if we go back in time to the dot-com bubble here in 2000, it was sitting at 147%, I believe here, just under 150%. So we are much higher on the Buffett indicator than we were during the dot-com bubble. So that could be signaling that the so-called AI bubble that we're in is much more concerning than it was 25 years ago during the dot-com bubble. We're sitting higher than 2 standard deviations at this point. And for example, the historical trend line tends to be the fair market value for stocks. And -1 would be like a great deal. -2 would be like, this is the fire sale. +1 would be slightly overvalued. But anything over 2 standard deviations is getting into like, this is a blaring red alarm situation. In no way, shape, or form am I suggesting that the stock market is going to crash tomorrow. Rather, take this as a warning because it could happen at any point here, but also keep in mind that the stock market can stay irrational longer than you can stay solvent. Basically, this could go up to 300% for all we know before crashing. It could go to 400%. Like, nobody actually knows. And I don't want anyone to get scared. I just want everyone to be aware. If anything, I want everyone to keep the Buffett indicator in their back pocket in case the market does come crashing down, because there are circumstances where this indicator can tell you when it's a great buying opportunity. For example, when this is sitting at about 100%, stocks are fairly valued. This is a good time to buy stocks. It's a great time to dollar cost average. It's just overall, you're probably going to make money over the long term buying those positions, and it won't really take you long to make your money's worth. And 80 to 70% or lower on the Buffett indicator is signaling like, okay, put all your money into the stock market right now. Things are very undervalued, and they're not going to stay like that very long. So keep that in mind going into the future. To wrap this video up, I'm just going to read this portion of the article here on Yahoo Finance. The Buffett indicator measures the total US stock market capitulation against the country's GDP, which is what we went over, essentially gauging if there's a potential bubble similar to the 1999 dot-com bubble. Once it bursts, it could cost investors around 5 trillion or 7 trillion Canadian total. Buffett once called the indicator probably the best single measure of where valuations stand at any given moment. That's very important to know. In a 2001 reflection of the crash, Buffett offered a simple guide. If the percentage relationship falls to 70 or 80% area, buying stocks is likely to work very well for you, as I've mentioned. If the ratio approaches 200%, which it is well over 200% right now, as it did in 1999 and part of 2000, you are playing with fire. Today, the Buffett indicator sits at a whopping 217%, topping the dot-com surge of 140%. It may explain why Buffett's appetite for US equities has cooled. Berkshire Hathaway has been a net seller of equities for 11 straight quarters as of June 30th and was sitting on a massive $344 billion in cash. I mean, of all people, Warren Buffett has seen many crashes in his lifetime, and I think he knows something's coming. The blunt reality is the stock market gains have outperformed America's economy growth by a very wide margin, obviously 200+%. And while Buffett admits the ratio has certain limitations, many agree US stocks look stretched. Myself personally, I do believe that we're in for some sort of correction here, maybe at the end of 2025 or even 2026. I don't know when, but I am taking profits on stocks. I took a bunch of profits over the last couple weeks. I'm looking to take more profits on some of my single positions and just recycle everything into more diversified ETFs. I'm really trimming out my appetite for risk, and I'm opting for ETFs. But that's just myself personally. Don't do anything that I'm doing. Have your own opinions. Do your own research. And yeah, just take this as a warning from Warren Buffett himself. Anyways, everyone, that's going to do it for this video. I do apologize if things felt rushed in this video. I did not have a lot of time to record this week. So if you did enjoy, be sure to leave a like down below, subscribe if you haven't already. And other than that, I will see you in the next one.